Good morning, everybody. This is Mark. We're back here for the morning call. It is Friday, a day before the weekend, New Year's Eve, obviously, on that Monday. So, are we going over the fiscal cliff? At this point, it seems like we are. I know the Congress is going to be back in session. They're going to meet a special session Sunday night. I don't know if it's going to come to anything's going to come to fruition. Everybody, is the market priced in for this? I don't know. It doesn't feel like it. If we do go over the cliff, which again seems more likely as you get less and less time to really make a deal. Yesterday was one of those days that really was just all headline related. We hovered. Then Senator Reid, I think, came on. We probably went down 10, 12 handles. Then rumor that they were coming on back Sunday night, whatever, and we rallied into the close, only to have McConnell say, there's no, we're not even close. So you got to continue listening to the headlines. Technically, which is what we base our trades on at this point in time, was not looking good. You were breaking some key territories. You were certainly breaking some key moving averages. Even on the spiders, you're basically, I don't know if it's a 200, but you're basically right at the 50-day, I believe. So right now, I'm looking for not a whole lot. It's the year end. A lot of times you have, either rallies or extensive selling. I think it's just a lot of, news-related action, a lot of liquidity. Illiquidity is in this market, and you got to know your prices. I've stopped looking at the level 2 right now, and I just, I'm looking at levels. Apple, you can say 500, 510 now is that next level. Did a rally, but it's still a bear channel. I mean, I'm long a little bit, but it's still a definitely a beaten up stock and does not look good technically. Now you can make an argument above 520, and we have the lines here that possibly it's an ascending channel. We'll see, which could work itself to the upside. I don't know if that's going to happen by year end. If we get a rally, we'll see if it has any life. And that goes across the board with most of the high beta. Amazon was really a sell 2 days ago, and at this point in time, it's a non-trade. Possibly, I don't know if it's necessarily a short, after 2 big days of down movement, but needless to say, it's a broken stock and it's an avoid, at this point in time. Google, 700 seems to be where it wants to hold, but lackluster at that. Maybe it gets going. If this market has an uptick, I think that would be one of the first I would go to. In that sense, I am long a little bit right now, but at the same time, nothing with any sort of authority. My positions, my aggressiveness is if it's from a 1 to 10, it's probably a 2.5, and I think that's key. You got to respect the fact that this market can't really have legs. We gap up, we sell off today. Maybe we're selling off. Maybe we'll get a little bit of a recovery. But with the fiscal cliff looming, nothing really to write home about. From a technical point of view, excuse me, the banks are still hanging in there, but not. I'm personally not involved with them at this point in time. I'm looking at it. I keep watching Goldman. I said Goldman, about a week ago, 125 was that level. It did hit 125 again, bounced, but again, not enough for me to really get convinced that I should be messing around here. JP Morgan bounced off its 21-day moving average, held in there. The banks look like they have a bid, so it's like, but is anything going to happen between now and a day and a half and year end? Probably not. I think they need a few more days of basing, possibly in the new year. They're the play to be in, but we'll have to wait and see. I think there's a lot of cross currents going on, a lot of headline related news that, quite frankly, is making trading pretty tricky and making the technicals really backing it up. I don't see a whole lot of beautiful looking charts that I want to say I want to get in either from the long side or the short side. And quite frankly, on that note, for me, I'm actually seeing a few more bearish charts, which is interesting also. Something we should be watching, the VIX. We should be watching the TLTs, which is the bonds, TBTs, to see if there's, either money gets put to work in the bonds or money comes out of the bonds. The VIX obviously had a big travel range yesterday, up a little bit this morning. I wouldn't say it was a capitulation day yesterday for it on the upside, but definitely an argument that it's up a little bit this morning. I could see I could see against 35, you could have some more work to the downside, but we'll have to wait and see what happens. Again, the VXX, it's the vehicle, and again, it's priced to 0, so it's not necessarily the VIX, the true number, which again seems to be holding over the 20 level. If it closes below the 20 level, I think then you got yourself a category that you can get a little bit of digestion. We're not quite oversold yet, so it makes for, again, a challenging market. Lastly, a few other notables I would just put on the radar. CMG from a chart-wise, very constructive, looks pretty good. Possibly over the 298 level, goes to 300, and then obviously you're looking at 323 as the next level for the 200-day. But you're going to probably have some work to do around 310, 315. So it's something that's on my radar, but nothing on the aggressive front. Another one that I was looking at yesterday from the long side, RKUS, had a nice move, 2-3 day move. It, looks unbelievable, and it's a new issue. So there's really nothing to the left. Something that we should maybe possibly keep on our radar. Netflix, you can make an argument against 90. That's the level it seems to be holding. Using a tight stop either way from the long side, that the 21 days should hold. That's where I'm at. You can just see I have a lot of ideas out there, but the question is how aggressive am I going to be, at this point, knowing that we have a day and a half left of the new year, and the fact that the fiscal cliff is still looming. Staying on the sidelines for the most part, letting the market come to me, and hopefully, just like yesterday, you have 1 or 2, 3 good trades, and maybe our folks down in DC actually say something, and it moves the market one way or another, that you can actually just take advantage of the volatility more than necessarily having conviction on your ideas or really backing it up with any swing ideas, because I don't think that's in the cards right now. It's certainly not from a risk versus reward ratio where I want to be. So hopefully that helped a little bit. Good luck today. Keep it light. It is Friday, the weekend before New Year's, and I think it's going to be slow, but you're going to have headlines regardless. Good luck.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.